Your credit utilization rate makes up a massive 30% of your overall credit score. That makes it only 5% less valuable than just paying your bills on time. To say that your credit utilization rate is important is a complete understatement. And one of the best things is that you have direct control over your credit utilization rate, because that utilization rate can change from day to day. Unlike your paying bills on time, which if you had a late payment 2 years ago, you probably have to wait another 5 years for that thing to fall off your credit report, unless you get lucky and are able to successfully dispute it. But your credit utilization rate, you can change that immediately. Now, in the long run, obviously, there's only one way to permanently affect your credit utilization rate, and that's to be financially responsible and pay down your debts like you're supposed to. But in the short term, there's some cheats or hacks that you can sort of game the credit system to make your score appear significantly higher than it maybe should be. And we do that by essentially hiding or lowering our credit utilization rate using a variety of techniques. In the last video, I talked about how you can hide all of this debt using business credit cards instead of personal credit cards, but today we're going to be talking about a different option for you guys, and that's going to be by using the upgrade card. Now, the upgrade card is a very unique credit card because it's sort of a hybrid. It's part credit card and part installment loan. There's really no other credit card that I'm aware of that functions in this way. So with a revolving line of credit, like a traditional credit card, your balance and the minimum payment due is always fluctuating. So as you make some purchases, your balance goes up, and then along with that balance going up, your minimum payment also goes up, right? And then you make a payment and your balance goes down, and then you spend some more money and your balance goes up. So your balance is constantly fluctuating, and so too then is your minimum payment. The amount that you owe every month is constantly fluctuating. With an installment loan, think more like a mortgage or a car payment. These have fixed payments for a set duration of time. So you might have a car payment that is $500 a month for the next 36 months. So that payment doesn't change, it doesn't go up, it doesn't go down, it always stays the same for a fixed duration of time, and then it's done. So now back to the upgrade card in general. So this is essentially a credit card. It's a Visa card. It is accepted anywhere that Visa is accepted, and it does report to all 3 major credit bureaus, Experian, Equifax, and TransUnion. But it's sort of, like I said, that combination of a credit card and an installment loan. So basically what it's doing is, as you make purchases throughout the month, they are lumping and combining all of those purchases into essentially one package. And then they're turning that package into an installment loan. So they're not really treating it like a credit card at that point. They're turning it into a fixed rate installment loan. And those installment loans have a repayment period of 2 years, 3 years, or 5 years, depending on how you have it set up. Now, why this is important is because since it's not really a true credit card, it's not getting reported as credit utilization. While it does report to the 3 different credit bureaus as a line of credit, and the balance is reported, the total available credit is not reported to the 3 different credit bureaus. And since it is not reported, the credit bureaus do not calculate any of those debt items into your overall credit utilization rate. So theoretically, if you're carrying forward a balance from month to month and you have a really high credit utilization rate, if instead of using a normal credit card, you use this upgrade card, all of that debt on the upgrade card would not hurt your utilization rate. It would bring that utilization rate down because it would only look at your true credit cards for that utilization rate. And so that would then decrease your credit utilization rate and therefore increase your credit score. Now, a few facts about the upgrade card. They have limits available starting at $500 all the way up to $25,000 credit limits on this upgrade card. With this card, you don't get direct cash back when you spend like you normally do with most credit cards. Instead, they give you cash back when you repay that debt. So every month when you make your payment, they're going to give you 1.5% cash back on whatever that monthly payment was. And like I said, this is a Visa branded card, so it is accepted anywhere that Visa is accepted. Now, the interest rate for this credit card / installment loan hybrid card varies pretty significantly. It ranges anywhere from 9% on the low end all the way up to about 30% on the high end. So you really have to watch out for what your interest rate is for this particular card. It's going to depend on a variety of factors. I'm sure your income, your work history, your credit score, all of that stuff is going to play into your overall interest rate. And the good news is this card is pretty attainable for most people. It does not have a super high credit score requirement in order to apply for this card. Usually if you have a credit score above 600, you should be all right in order to get this card. Now, like always, I try to give people the good, the bad, and the ugly with all of the products. So while this can hide that credit debt that you have from your credit utilization rate, it does have a few downsides with this particular card, and we're going to discuss those here right now. So the first negative point is that with most credit cards, you get sort of a grace period where all of your purchases are interest free. Usually about a month down the road when your next statement cycle is due. Anything that you don't pay in full by that date, then you start getting charged interest, but usually you have that little gap period where everything is interest free. That's not the case with the upgrade card. With the upgrade card, you're actually going to start getting charged interest from day one. So there is no grace period on this interest. And the second downside is that as a side effect of it being a fixed rate installment loan with a 2, 3, or 5 year repayment plan, that means your minimum monthly payments are usually going to be significantly higher with this upgrade card than with a normal credit card. Because with a normal credit card, if you put $1,000 on your credit card, your minimum monthly payment might be, I don't know, like 20 bucks or something like that, right? But with the upgrade card, especially if you have it set at like the 2-year limit, you got to repay that entire $1,000 within that 2-year time frame plus interest. So your credit card minimum payment with the upgrade card is probably going to be closer to $100 as opposed to the $20. Now that can obviously be a downside if you're struggling to make the minimum monthly payments, but the good news is it kind of forces you to repay this debt a little bit faster so that you're not paying just this minimum $20 payment, for the next 20 years until you finally repay that $1,000 balance. So for some people, this upgrade card can be a fantastic way to essentially hide a lot of debt from your credit utilization rate, and that's going to significantly increase your credit score. If you found this video useful, be sure to subscribe, leave a comment down below, give it a thumbs up for the YouTube algorithm, and as always, I'll see you all again next time. Thanks.